Welcome to Common Curiosities Retirement, where we aim to help people learn financial strategies they may want to use in their own life, all while trying to avoid the intimidation or boredom of classic financial meetings. Here's your host, my husband, 𝐻𝐞𝐫𝐞.
Welcome back. Thanks for joining us. Another episode. I have my wife here as she has the afternoon off, and she just so happens to be wearing all my clothes, my hoodie and my.
Absolutely busted.
So,
Yeah,
um,
you can see the fit. Got
sweet.
Mikey sweats.
Sure, everybody wants to see
Yeah,
sweatpants and hoodie.
we do. And I got slippers on too.
Sweet.
Yep. Good day at the office.
So anyhow, she swung by, and I'm wrapping up, and we thought we'd do another conversation. So
Yeah,
she's gonna spitball away her ideas.
we're ready. So oh my gosh, I was going to tell you it's Hot Take Tuesday, but it's Wednesday.
Is Wednesday
It's Wednesday.
someday?
All right, it's what do you think Wednesday?
That
Yeah, thank you. What do you think about?
Here we go.
So there's kind of, and I'm sure they've been around for a while, but there's some philosophies out there. One philosophy in kind of approach to finance, approach to work is like the get rich quick or the do it all now, or I'm just going to get what I deserve right away versus the slow and steady
I mean, get deserved
work,
right away. Sorry.
get what I believe I deserve right away
Okay.
versus the slow and steady. I'm going to move up. I'm going to work hard. I'm going to, slowly acquire my money and be someone who plays more of the long game and works really hard. I guess, what do you think? What are your thoughts? What are the dangers, the pros, the cons? Briefly, just what are some thoughts you have on the do it all now, get rich quick kind of idea
Yeah.
versus the just be a hard worker and show up and
Um,
it'll get their idea.
I would say, it sounds great. Get rich quick. There's a bunch of, I see all these different videos and, oh, pick this stock or this, that. And I sometimes you even try them. And I have not found a way to consistently see people get rich quick.
Yeah.
Yeah. I've seen people who pick a certain investment, or I've seen people go to the lottery and win the lottery. Those are out there, but
Mhm.
when we look at them, it's something we're talking about, like sports gambling is a huge thing right now. So,
Huge
hey, I'm
thing.
gonna hit a big parlay, and I like sports
Mhm.
gambling. It's fun, but it gets people in trouble. Maybe, and you hear about this one person or 1% of the people that get it. Well,
Yeah.
unfortunately, the rest are the money's coming from somewhere. If you can find a get rich quick scheme that works, great. I haven't found it.
Yeah.
I would say something that there is something about building it and growing it. I
Mhm.
think everybody that I've seen that have worked hard, they seem to be great people that do it that way. If you could find it, great. But we're looking for it all the time. What's the best investment idea? We're going to
Yeah.
use it. And if there was one out there, I think there's thousands and thousands of people that's their sole job is picking investments. I think we probably would have found it,
Yeah.
but I'm not going to say it's a no.
Right. Well, even with careers, I think with
Yeah.
social media, people see oh, I just become famous, I go viral and I make all this money with social media. Like, yeah, that works for some. And I think a danger with it is a lot of kids now are like they want to be an influencer, which is great. Like if it works out, that's great. That's a awesome way to make money, but that's not true for
Correct.
everyone. And so there's still some truth and some quality to man, show up for your job and work hard. And there's still some truth that sometimes you have to climb a ladder, sometimes you have to work
Yeah.
hard in order to
I
get
think
where you
this
want to
has
be.
been really overblown. I'd say people I meet people that are making they're 30, 40, 50, making 100 to 500 grand a year. Like, well,
Mhm.
I'm not making much. These people are making more. I'm like, I don't know about that because one, you don't know what those influencers
That's
making. I
true.
I I I I think people with social media like, oh, I'm 30. I should have $1 million income and this and that.
Yeah.
And when we look at the actual math, I don't know the most recent number, but like the median income is I don't know, 50, 60 grand in the area. Maybe there's a couple people that are just rocking it, but I mean,
Yeah.
people were like, they were sad and depressed when I see them like, oh, I'm only making 120 and I'm 34. It's like,
Yeah.
That's pretty dang good.
Yeah,
Uh,
for sure. I think kind of in a tale as old as time is like the grass is always greener. And it's just so much more accessible to compare and to kind of see what other people
Yep,
are doing and what other people have now that it's just more common to think you have to be somewhere that you're not.
correct.
Um,
I'll say this though, I do get to work with some of the people in their 50s, 60s, 70s who are very, very successful, and they
mhm,
seem to have the same type of things. Some of them have inherited it, but a lot of
mhm.
them, they did a couple ways. Either they built their skill set,
Yeah.
and so then they just
As in like,
like, the best
got
thing
really
I
good
say
at
to
their
do,
job.
your 20s and 30s should be about building a skill set that an employer would wanna hire you.
For example, refining your plumbing skills or
Correct,
becoming a physician or becoming the best accountant that you
correct.
can,
Become a
etcetera.
surgeon. If you wanna be an electrician, you be very good, and you do good work at a fair price, and you do it, and they'll build it that way where either their employer says, "You're too valuable to let go, I'm gonna keep giving you raises."
Sure.
I've seen that work very well, and then, they save more than they spend, or if you really wanna get wealthy, it seems to be you start a business.
Yeah.
And you do very well. You do fair value, you do the right thing, and over time it works. And you can talk to anybody that owns a business. It's easier said than done. It's
Yeah. And there's some danger there because sometimes you go down before you go up.
correct. Most companies don't make it, or you have slow years. But if you can find a if if you can solve, they all say, my mentors would say, you find a problem, you solve it for people, and you do right by it, and you do it at a fair price. That's the way to do it. But
Yeah.
you got to find a
Yeah. And of course that's not for everyone. Like I'm sure you have some clients that are successful just by, being consistent, really hard workers and,
Mhm,
the job that they found that they're good at and
mhm.
refined those skills and just have found success by being someone who's dedicated.
The other way is typically, them and their spouse makes 100 to 150 together. They spend 70 and they invest 30, 40, 50 a year. And over the years, it's turned into a lot. But
So ultimately, you make the amount you make and a lot of it is what you do with it and
correct.
how you plan and how you invest and how you spend and save.
But I haven't seen a get rich quick that seems to be consistent enough, unfortunately.
Good old fashioned hard work
Right.
still works. What do
Yeah.
we have? We have the grit lion up
A
here.
lion's grit. You got to get to work, man.
Get gritty.
Yeah.
Okay. So with that, there are some other things that like come up in conversation that people consider, people think about. Um, a lot of ideas that I, have heard from time to time in different circles. And some of those is like when you own a business or when you own items or, maybe I have this office or I have, something that I might own and I could you hear this proverbial put it under an LLC. What does that mean? Does that do anything
Yeah.
for me? Is that a helpful statement? Is that I'm sure it's conditional. I'm sure there are some options, but like kind of do you have an overview? Do you have a thought on this? Is there
Yeah. First, yes, I'm a financial planner. I'm also an enrolled agent. And so, but I don't know your situation.
and
So
an enrolled agent means you can
it's, like the highest level the IRS gives out. So if I
that's a
want
good
to argue against the IRS, file tax returns, or, "Hey, I think we should be able to take this deduction," that's what an enrolled
Mhm.
agent is kinda trained to do.
So
I
it
don't
gives you some knowledge.
correct,
Here's to say that you have some understanding and some ability to speak into like tax strategy and
correct.
things like
So
that.
I got the certification to learn it, but I don't know your specific situation. But
Yeah.
you'll see it all over, social media. Put in an LLC and you don't pay
Mhm.
taxes. First off, like, an LLC doesn't do things for taxes.
'Kay.
It's there for protection.
Protection of what?
So your personal life and, say, businesses you have. So we want to make this corporate veil or whatever. The government will protect your personal life from your business. So if something happens
Mhm.
in your business and you get sued or you go bankrupt, you could protect your personal. Because otherwise, a lot of people would say, "Well, I'm not willing to risk my family's house and
Mm. If my
savings, and
business goes under.
yes, I'm not going to
Okay.
move." So they allow that LLC. The LLC is more if you get
So I put my business in the LLC so that if it fails, my house doesn't go with it.
correct. Your personal stuff. So that's kind of the LLC, but it's not like a tax.
So there's no really
It's
tax
not like you open
benefit
an
in
LLC and
putting
you never
my
pay tax again. I was seeing some of it. I'm like, this is completely false.
Mm.
Now, if you own a business, yes, there's certain deductions you can take as a business owner because the
Sure.
government wants to encourage people to start businesses, so it's not just these huge conglomerates that can
Yeah.
dominate. So, like, if you have a business expense and there's rent or a house, payment on the building, or you're buying furniture or stuff, you could write that off. And some of it's an immediate write off.
Right.
Some of it's like a closer to a 7 year, and some of it's like a 27 year, and you can depreciate that
Sure.
over your life.
So I get to write it off because it's under the LLC and I'm using it for my business.
Correct.
What does a write that off mean? It doesn't mean it's magically free.
Correct.
It means that I don't pay taxes on it or I pay fewer taxes on it or
So I see this mistake. People are like, so let's say you buy you, businesses will buy a car
yeah.
because if it's over a certain amount of weight, you can write that whole expense off like that year.
Okay.
So you could G wagon, or it's got to be over like what 7,000 pounds or something.
okay.
So it's a bigger car, but and so people would just buy it because they want the write off, thinking they're going to save money. Well, even if you're in the top tax bracket,
Mhm.
you're still going to keep less because you could get a write off for that. But even if you're paying 20, 30, 40% in tax, you
Mhm.
still lose that
More
chunk
than
of
you've
money.
gained
Correct.
by writing it off. And
So
so
you don't
writing
want
it
to,
off again, can we just define
yes.
so what is a was write off money that comes back to me after I write it off on my taxes? Is
So,
that money that I don't pay in taxes?
so let's say your business makes
No, don't give me
$500,000.
an example. Just define it. What is it?
You purchase something for your
Yep.
business.
Yes.
That cost that you purchased it for,
Yep.
you could take it as a deduction, or
Okay.
you can essentially you can say, I didn't make that money in my business because I used it for my business.
Okay.
So if you bought something for 10,000
Mhm.
and the business profits were say 100,
Yep.
you could say, well, that 10,000 I bought
This is
these.
a business expense.
Correct. So now you're taxed on 90 instead of
So
the
I'm
100.
taxed on that 90 of earnings. So it just reduces the amount that you're taxed by when you write things off.
Correct. It's not like, hey, I bought something for 10,000, I owe 10,000. It's a total zero. That's not, it's different than a credit.
Okay. So it's not truly what happens is you're not paying taxes on that money.
Correct.
Okay.
Yeah.
Okay. Not paying taxes on the money that you use to buy the thing
Correct.
for your business.
Which makes sense.
Does it have to be under an LLC for me to write it off or can I just write it?
no, it doesn't technically have to be. So there's businesses that aren't an LLC. Most of the time, I don't want to give a blanket recommendation here. Most of the
Right.
time, you have an LLC.
Again, it's just for protection
Correct.
purposes. And so then it sounds appealing to write things off. Like I want to write things off so that I don't have to pay as much taxes on my business income. What gives? Like where do I want to write everything
Uh,
off so I don't pay any taxes at all? Do I want to is there lying? Is there cheating? Is there
yeah.
what's going on? Like how do we
There's certainly things
what
out
do we
there
do
that
here?
aren't. So there are downsides to it. So it's not. I'd say this, but there's pros and cons everywhere direction.
Sure.
Yeah, you probably want write offs in certain years. So, but let's say a lot of times this happens with homes,
Okay.
rental homes. So
Sure.
people have 5, 10. I have clients
So
with
it's your business
20
that you have
properties. Yeah, we have
rental
20 properties.
properties.
So they'll have an
Okay.
LLC on each property,
Yeah.
and you can deduct a
Ooh, you
certain.
do them each separately?
This would get out of my area of expertise, but
Okay.
a lot of
Okay.
times
Anyway.
they'll do them separately. So if you get, let's say you rent to a bunch of college kids,
Yeah, if
they
that one
throw a
gets
huge party
trashed, then the
and
other
people
ones
get
are
injured
protected
or someone
separately.
gets hurt.
Okay.
That one, they don't get access to all the other
That
ones.
one's separate.
We'll
Okay.
talk to
Anyhow.
some of the special. But so say you're deducting it, so you get that write off. But when you go to sell it,
Mm-hmm.
since you took a write off, you're gonna owe taxes on those write offs.
Oh, so you have to pay those taxes back that you didn't pay.
Yeah, it's
If
kind
you
of like a
if you
retirement.
ever
If you die with it, you could look at a step up in basis. So if you're gonna keep this forever, you could. But yeah, if you sell it,
like say I buy
to claim we have
a
to claim
desk for my office and 40 years from now I'm retiring and I sell that desk, am I paying the taxes on it
if you
then?
made money on it. So like a desk
Okay.
is tough because like
Okay,
you
if
buy a
something
desk for
bigger.
$1,000 or 500 or whatever it is. Are you gonna sell it for more?
Right.
Then you deduct it. But that's the gist of it. But yeah, so like
Wait, you only pay taxes on it if you make money on it?
so yeah, so that's it's like with an investment. Or let's say
So if I sell it for less than I bought it by $1, I don't have to pay those taxes back?
So if you bought something for 10,000 and you sell it for 8, you
Yeah.
didn't make money. You don't
So
you
I
don't owe
don't have
tax on
to
it.
I don't have
It's
to pay
like an
that out.
investment. If I
Okay.
bought a fund at
Sure, and sell.
50,000
Okay.
and I sell it for 70, I have those
That
gains.
20,000.
But if I
Okay.
have a loss, I could book losses and write those off.
Okay.
But yeah, I wouldn't owe income or capital gains because I lost money.
Okay.
Yeah.
Okay. So, okay, back to our original question. Do
Yep.
I wanna write everything off that I possibly can so my taxes are, like, nothing? Or again, I guess it's
Yeah,
situational because if you're gonna sell it, then you're gonna have to.
I would tell you, some people are like, I was with somebody like my taxable income was zero.
Yeah.
My income was zero, and they were super happy.
Yeah.
And I in my head, I was like, you need a whole new plan because they were
Why?
super happy because well, my income was zero. Well, so what happened? We probably took a lot of write offs
Right.
and we didn't fill up those low brackets,
Didn't fill up what little brackets?
tax brackets. So the first, there's standard deductions. So that's a zero federal tax. I would have said, well, we probably want to claim enough income to fill up the 0% tax bracket.
Uh,
Then there's the 10, then there's the 12, then you can get to 22 in the 30s.
right, because your income is taxed in the category that it falls in.
Correct.
So it's not like everything that you make is taxed at the whatever bracket.
Correct.
It kind of stays categorized as you move up.
So if you take a bunch of deductions to get down to that like zero, well,
Mhm.
probably someday you're going to have to pay it in the future.
How so?
So let's say you deferred a bunch of money in a deferred comp plan or a
Mhm.
401k or rental businesses or whatever,
Yeah.
and you get yourself to lower brackets. Well, now you're paying taxes on the lower rates. But
Yeah.
but let's use example of 401k. You put 20K in there,
Mhm.
it's not taxed.
Right.
But when you use it in retirement, you get taxes.
Okay.
Well, what if my tax bracket now was 0, 10, or 12 because I got all these deductions or my income was lower?
Yeah.
And then in retirement, now I don't have these deductions. Say maybe your rental income houses, you don't get
Mhm.
those deductions because you've used up the years,
Yeah.
or you don't have the business income, or you're
So it's a
selling your
similar
business.
thought a little bit to the Roth IRA. Potentially, you might want to put money in and pay the taxes now when you're in a lower bracket so that you don't have to do that later. Kind of a similar thought.
Right.
Potentially, you might want to write things off to have you in a lower bracket, but you might want to pay taxes on some of those
Right.
things now if you're in a lower bracket as
Yeah.
opposed to.
So for you and I, maybe I don't want to deduct certain business expenses if I can avoid it,
Mhm.
because if our income is different later,
Yeah,
I
when I'm
took
not in
my
school.
yeah, I
Yeah.
took my basis down,
Yeah.
which means I'm gonna have to recapture those gains if I sell it.
Okay, so the taxes work in a bracket, right? Or in like, they stay in the category. Like you have some stuff in the 0%, you have some stuff and then,
It's
that,
progressive.
but it's not like all of your money is taxed at the highest, whatever category you're in. So if you're paying taxes on, this might be, I might be misunderstanding.
Yeah.
If you're paying taxes on my Roth IRA to put my money in now, what bracket then is it taxed at?
It's gonna be
Where the
taxed at
taxes the highest one that end up in, or
typically, yeah. So your marginal is your highest.
okay,
So it doesn't really matter where like bucket. It's just so I taxes I say are like you're filling up buckets of water.
yeah,
So there's a 0% bucket of water. Once you fill that up, it falls and overflows to the
overflows.
10,
Okay,
then overflows to the 12, then overflows to 22 and 24.
sure.
So when you take your deduction,
It's
you're
like
taking
those
it
little
off at the
like
highest level.
nesting dolls.
Oh, yeah.
You know those?
Yeah, that's another idea.
And you pour and then it kind of falls out. Yeah.
Oh, I was thinking the little things that get bigger and bigger
Yeah,
dots.
that's
Oh,
exactly, but then we're just putting water in them
correct.
so that they fall into the bigger
Yeah.
ones. Okay.
So if
But uh, so, you can't say I'm putting the money from my 0% tax bracket into my
well,
IRA.
well, you
So therefore, your IRA, what you're putting into your IRA is taxed at your highest bucket that
you
you
already
made it
filled up
to.
that bucket. So you don't have to designate it. So let's say you get 100 grand. You filled
Yeah.
up the 0, 10, 12.
Right.
It's
But I'm
overflowing.
saying,
So you would take it out of that highest overflow level.
okay. Oh, I see. So
Correct.
then you can't pick where the money that you're contributing is coming from. So it's coming from the highest. I mean,
It's gonna
why
come.
wouldn't it?
Yeah. But so let's say you're a farmer or you have a business and you do need something and you had a
Yeah.
great year this year and you're
Say
getting
you're
closer to the year.
a plumber and you need some of your equipment. I don't know.
Correct.
Today's equipment. I don't know.
Farmers. You need a
Farmers, plumbers.
$200,000 tractor.
Yeah.
Or a business, I need 5 new fleet vans for my plant,
Yeah.
whatever, and you're having a good year, maybe you do say, "I want those deductions this year because I have a large year, so those are I'm
Mhm.
in a higher
A
tax
larger
bracket,
Oh, a larger as in income or larger as in expenses?
larger income, so you're
Yeah.
in higher brackets maybe than you
So
normally
then
are."
that's the year you wanna maybe
We would look at
buy some of your larger expenses.
yeah. Now if you don't need them for many years, like, don't
Don't buy things you don't need.
correct, don't buy things you don't need,
Advice
just
as old as time. Don't buy things you don't need.
you'd be shocked. I see people, well
Stay away from TJ Maxx.
correct. My XYZ advisor or I don't want to throw people on a bus, say, "I needed to write things off, so I bought
Yeah.
a new
This is what I
Escalade."
tell myself at the store. No matter how on sale it is, you still have to spend money to buy it.
Correct. Thank you. Thank
Yeah.
you for doing that. You're
Welcome.
not a big spender.
I'm
I
not a big
appreciate that. You
spender.
you asked me about it. You're not a big
Not a
spender.
big spender. Okay, so that's kind of the idea of write-offs is that you don't have to pay taxes on that money. It can kind of help you if you need to maybe do some tax bracket movement.
Yep.
Um,
You could say tax bracket avoidance. So technically, by IRS regulations, avoidance is completely legal. You're strategizing of ways
okay.
to avoid it. Evasion
Evasion.
is illegal.
That's what they call Al Capone for, right?
I'm sure he was doing a lot more than
Yeah, but I think that's how
I
they
think
got him.
I think you're right. We took that tour and that's how they actually caught him.
Yeah.
Tax evasion. So don't mess
So
with
don't
tax.
do that.
Now he
Yeah.
was yeah,
He did some other bad
he
things.
does some probably some other things, but apparently tax evasion is
Just
what
a fun fact that you might know. Okay. So any other little tips or tricks or things that kind of, are helpful for business owners or people that are working hard and trying to maximize their money? I mean, we've talked about retirement things, we've talked about that on other podcasts, but things like write-offs, things like LLCs, any other tips or tricks like that that you kind of could think of?
I would say document. So when you go through the exam, I would say the IRS is actually more lenient than I originally thought.
Hmm.
Like they'll say, okay, with this type of thing, you need a 50% chance to think you're going to be right, or a
Okay.
33% chance. And so even if you're not, like if you get audited or you get a letter, people start freaking out.
Yeah.
And they say, nope, they're not coming down to beat down your door.
Sure.
Um, they might ask questions, and so just because you get a letter, but I would say keep receipts of everything that you're writing off so you can prove it. Keep a spreadsheet, keep a folder of receipts, um, and then some people don't file tax returns because
Okay.
even I've seen this a lot of times. It's older people or people with low incomes,
Okay.
and they won't file their tax return. Well, if you don't file it, the government can come back at any year
Mm.
and get you and penalize you. Or
They won't get you. They'll penalize
they'll
you.
penalize you. But if you file it, there's a certain number of years they can go back. So
Okay.
even if you're not gonna owe taxes or you just didn't do or whatever,
File so that there's a record.
yeah, and say I filed or at least tell them. Or if you're trying to take a deduction, you're not sure, tell them this is what I'm gonna do
Okay.
in that way. But
Yeah.
no, tips and tricks, I don't know.
Cool.
Good questions.
Well, kind of a fun topic, something a little out of the usual. Not typical, not your first thing you think of when you think of financial advising or tax strategy or things like that.
Yep.
But it's all to say that, some of your financial advisors, including the one that I know very well, can be a wealth of knowledge and can be someone to ask questions that you might not think of. Well, yeah, thanks for tuning in today and continue to subscribe, listen to the podcast, and hear any future conversations we might have when I pop in and wear all of Michael's clothes and say, you know what, it's podcast time. Look at, he's loving my sweatpants right now.
It's fun to have you. I'm usually working, kind of I'm often in the office by myself, so it's
Yeah,
fun to have you join.
great. Well, work hard, kids.
Work hard, kids. Like, what?
Yep, that's the ending.
Let's make sure we're on the same page. This is general educational info, not personal advice. We don't know your goals or financial situation. Before making any decisions, it's always recommended to talk to a qualified professional who can tailor guidance to your specific needs after learning more about you. Here are some more exciting disclosures to help make this even more clear. This information is not intended to be a substitute for specific individualized tax or investment advice. Securities offered through LPL Financial, member FINRA/SIPC. Investment advice offered through Harborfront Financial Group, a registered investment advisor. Harborfront Financial Group and Custer Financial Advisors are separate entities from LPL Financial. Investment advice will only be given after a client engages our services by executing the appropriate investment services agreement. Harborfront Financial Group DBA Custer Financial Advisors CFA is a registered investment advisor RIA. Registration as an investment advisor does not imply a certain level of skill or training, and the content of this communication has not been approved or verified by the United States Securities and Exchange Commission or by any state securities authority. Custer Financial Advisors renders individualized investment advice to persons in a particular state only after complying with the state's regulatory requirements or pursuant to an applicable state exemption or exclusion. All investments carry risk. No investment strategy can guarantee a profit or protect from loss of capital. Past performance is not indicative of future results. Advisory services offered through Harborfront Financial Group, CRD number 331763,